Have you ever looked at your cell phone bill and wondered, can I write this off? The answer is yes, but how you claim the tax write off depends largely on how your business is taxed. I'm an enrolled agent with over 14 years of experience helping business owners navigate taxes, accounting, and IRS rules. And today, let's talk about cell phones, similar equipment like iPads and tablets, and the right way to claim this tax write off. Because the question isn't simply, can I write it off? The better question is, what is the correct way to write it off? Because the answer depends on how your business is taxed, how you use the phone, and whether your records support the write off. Let's start with something many business owners don't know. Before 2010, the IRS treated cell phones as something called listed property. Listed property was a category of assets that could easily be used for both business and personal purposes. Because of that, business owners had to keep very detailed records showing business use. Beginning with tax years after December 31st, 2009, Congress removed cell phones from the listed property rules. That made the tax rules much simpler, but it didn't eliminate the importance of good documentation. Now, let's talk about how this works depending on how your business is taxed. If you're a sole proprietor, or if you own a single member LLC, your personal phone is generally considered a mixed use expense. That means it's used for both business and personal purposes. Because of that, you generally deduct only the business use portion. While you don't need the detailed logs that were once required under the old listed property rules, you should still have a reasonable method for determining your business use percentage. Something you can explain, something you can support, and something you document while it's happening, not next March when you're preparing your tax return. Now let's look at partnerships and S corporations. This is where the rules become more favorable. If the partnership or S corporation provides or reimburses a smartphone, tablet, or similar equipment primarily for legitimate business reasons and not simply as additional pay, the tax treatment changes. The business generally deducts the cost as a business expense. The partner or employee generally doesn't include that benefit as taxable income. Reasonable personal use is generally treated as a de minimis fringe benefit. That means personal use isn't treated as additional taxable compensation. And unlike a sole proprietor, the partner or employee generally doesn't have to keep business use logs showing every business call and every personal call. That's one of the biggest advantages of these rules. Now, that doesn't mean every phone qualifies. The business must have a legitimate non-compensatory business reason for providing the phone. For example, the employee needs to be reachable during the workday, coordinate schedules, communicate with clients, or respond to business issues after hours. Providing a phone simply to improve employee morale, attract employees, or provide extra compensation doesn't satisfy that requirement. Now, let's make this practical. Imagine you own a home care agency. Your scheduling coordinator needs to answer caregiver questions, communicate with families, respond to last-minute schedule changes, and remain available throughout the workday. Providing that employee with a smartphone or reimbursing their smartphone may qualify under these rules because there is a legitimate business purpose for the phone. And remember, when these rules are met, the employee generally doesn't have to track every business call versus every personal call. Now, here is the habit I want you to develop. Whenever you're deciding whether something is a tax write-off, don't stop at asking, can I deduct it? Ask yourself 3 more questions. How should I record it? What documentation should I keep? And if someone asked me about this expense next year, would my records tell the story? Because that's really what good accounting is all about. Building records while your business is operating instead of trying to recreate them months later. That's what creates confidence, and that's what gives you peace of mind at tax time. So here's the big takeaway. Yes, your cell phone may qualify for tax write-off, but the correct way to claim it depends on how your business is taxed. For sole proprietors, that usually means deducting the business use portion and keeping reasonable records. For partnerships and S corporations, the rules can be more favorable when the fund is provided or reimbursed primarily for legitimate business reasons. Understanding those differences helps you claim the write-off the right way. While building records you can confidently stand behind. Now, in the next video, we're going to look at another expense that raises a lot of questions for home care agency owners: health insurance. We'll talk about when those costs may qualify as a tax write-off, how business structure affects the answer, and what records you should be keeping throughout the year. I'll see you there.